Hi everybody, thank you for watching. This is a very important session because I will be discussing Sandisk and the earnings, of course, and how Sandisk got to this level because this stock has seen an astronomical rise and people are comparing it to Nvidia at 2023. And in this video, I will give you a bit of a background how this rise could have occurred and also how to play earnings and how to play Sandisk after that. And the earnings I will do with options. And if it's too difficult, then I will just explain it step by step so everybody can follow. Don't worry if you don't get it. You can drop a comment below. You can also ask me, reach out to me, and I will explain this whole strategy to you so you can implement it for yourself and also you can exit it in the right way. Because I see a lot of people, constructing difficult strategies, but they don't know how to really trade it and, close it out. So in this video, I will do that. However, a bit of a background about Sandisk. Why is this stock up like 1,000% in the last month? Is because there's a shortage of memory. So right now I'm recording this video, and if I wanna like save this video, I could do it on Google Drive. I could do it on like the Apple iCloud, but also I can do it on my hard disk. And right now memory shortage is so high that a lot of people, especially hyperscalers, like Meta, Microsoft, Google, they just need memory for all the models that they're developing. And a SanDisk has this memory ready, and so that's why a lot of people are looking at this stock right now. So if you look at my screen, this is the option chain, and I'm choosing the expiry of 30th of Jan, so this will be end of this month. And the reason why I'm choosing end of this month is because, that will be one day after earnings. I'm only interested in earnings right now. And if you are the same, if you don't want to like place a bet on SanDisk for the long term, then just if you just want to incorporate earnings, then you just choose the nearest maturity date. So this will be the 30th of January. Right now, if you look at my screen, you can immediately see that the volatility is just extremely high because this stock has done like 1,000% in the last month. So right now, immediately one takeaway, one thing that you need to consider is that by buying this stock, you never ever want to buy one call outright. And I will show you immediately what I mean. So if you look at my screen, I can choose strategies. And if I choose strategies, I can develop something that looks like this. So right now, SanDisk, let's say this is the day before earnings, like a few minutes before earnings, even, and you want to like create your strategy around that, then you can do something like this. If the stock closes at 527, you can buy one call for 527, but you also need to sell one call for, let's say, 580. And the reason why you want to pick a call that's a bit higher, with the strike price that's high, is because if management of SanDisk really confirms that there is a memory shortage and they will not be able to meet demand in like next year and 2028, 2029, and there's such a demand for the products, then this stock can go, it kind of confirms to the management that yes, indeed, and also to the investors that this stock is in high demand, and this will be their Nvidia moment. So choose a strike that's a bit high up. However, what you're doing right now over here is that you're kind of like, so you don't want to like buy this one call for like 2,800. So this is pretty high, right? This is like really expensive. So you also want to sell a bit of upside, a bit of theta, and a bit of vega, so a bit of volatility as well, because just by buying this one call, it will cost you like 2,800. However, there's already, keep in consideration, there's already an astronomical rise the last month. This stock has done 1,000% in the last month. So this is extremely high. So, it doesn't, you could also sell a bit of upside, and by doing this, let's say I choose to buy strike for like 530, I sell one call at 580, same maturity date. This will kind of like cap my profit, of course, at 3,200. So I can just like double my money over here. So this is already pretty good, and it really beats this strategy by just buying one call and just hoping for the best. That SanDisk goes to like 700 or something. I think that's not possible, and this is my opinion that it is not possible that it will go all the way to 700. Is because that this stock in one day, right? Keep in mind, in one day, it cannot go to 700 because this is just such an astronomical rise that already happened to the stock, and there might be even some profit taking. So there's also something that you need to consider. So always sell a bit of upside, especially if the stock has done like an astronomical amount already. So even if you don't want to sell like if you really think it's going to move another $70, after earnings, then, at least sell the 600 call to get some money back. Don't just buy this one for 2,700, and that's just way too expensive. Now, another thing that you need to consider again, if this stock has done such an astronomical amount in the last month, then there also could be a pullback. And the reason why I could see a pullback is because this stock is now priced for perfection. So everybody is expecting this company to have their Nvidia moment of 2023. And right now it would just go up and up. However, Nvidia has, it's not the same. Nvidia is doing very sophisticated. It's doing something that matters to like the overall population of the world, creating these chips that are used by these hyperscalers. So Sandisk is just trading a commodity. They're trading memory, just to break it down very simply. They're trading that, and there are another companies that are having the exact same product. There's no difference in like how you say quality. And also one thing that you need to consider, there could be other companies around the world that also see this shortage in memory, and they're gonna say, yeah, I also want to do this. Let's also like create memory for these hyperscalers. So don't like really believe in this monopoly of SanDisk that they will own the market. They have to share the market with other players. So again, what you can do right here is you can buy a cheap insurance. And I would recommend this to everybody, that even if you buy this call for 530, you pay 2,700, and there's something you want to do, at least buy a call that's a bit cheaper. Buy like a put. I'm sorry, buy this put for 480, so you can increase. This will also increase your expenditure a bit. However, this is of course cheap insurance that if the stock falls all the way back to 480, or like back to 500, then at least you could get some money from this very cheap call. However, I would even make it cheaper. Buy this one for 400. This will be really cheap. However, if the stock has done 1,000% this last month, and the management kind of cannot confirm the hype, and the stock falls all the way back to like 350, and this is something that could be possible if there's like a 20% drawback, and if this happens, then the 400 put will like take some of that damage, and you will get some profit from that, and you will don't have to lose everything on this very expensive call. So buy some cheap insurance, that if the stock pulls back, that at least you have this cheap put over here that will collect some of that damage. Now, I will get into more difficult, but also more profitable and more precise strategies right now. So this is something it's more difficult than just buying one call, buying one put, or buying like a strangle or like a bull spread. This is something that you look at, and this is called a butterfly. And the reason why I really like butterflies is because this is a very precise strategy, and it also pays handsomely when volatility goes down. So it kind of looks like this. And the reason why it looks like this is because they call this the shape of a butterfly. I'm not sure how they got to that term. It doesn't really look like a butterfly to me. However, they say this is like the body of the butterfly, and these are the two wings. And actually what you're saying here is that if Sandisk kind of moves, slightly, and it just kind of goes to like 540, or maybe let's say 545 or 555 around here, that this is where you like reap the most benefits, because this is where you pay only $50 to get $1,000 if it exactly ends at 550 on the 30th of January. If it goes a bit around the edges, right? It goes around this one or this one. It goes around 546 or 553. This is kind of where the stock price needs to end up. And there you get this part of the profit. And like the lower it gets or the higher it gets, the less profit you will make. And eventually, if Sandisk drops all the way to like 537 or 556, 65 right here, it ends up right here, then you lose the whole premium of $50. However, this is a very interesting strategy because this stock already moved like 1,000% last month. So do not really expect the same astronomical rise. If you do not expect that, you think, earnings kind of will confirm the rally. However, it will not add to the rally, that the stock will not move again another 20, 30% after earnings. Then it makes sense to do something that's more like neutral. And this is how butterfly comes in. However, you also, of course, let's say you're wrong and Sandisk does even better, right? You want to do something like this. This is called a broken butterfly. So it doesn't look exactly symmetrical like the other one. And what you're saying here right now is you pay like 250 for it, $215. And if Sandisk really does well, and it ends up around 550, something right here. However, if you're wrong, you want to be wrong to the upside. You just want to have some more upside. Then you create this strategy. This is called the broken butterfly. You do this by buying one call, you sell two calls of 550, and you buy another call to close out the strategy for 555. And it looks like this. So the moment SanDisk goes to 550 after earnings, you get the max profit. you get like $1,000 and you net like 785. For simplicity, let's say you pay around 200, and you get this whole package. So this is what I call package after this. And you buy this whole package for 200, you sell it for 1,000, you net 800. So this is a nice profit. This is like a 5 times return. However, you need to take into consideration that if Sandisk really does well, if the rally and retail really gets behind Sandisk, then this stock could move maybe all the way to like 565, 575, and you also want to make profit if that happens. So right now, if it doesn't land at that 550 or a bit around that, then it doesn't matter as long as it goes up even beyond that. If it goes to 560, 570, you can still double your money. So that is the nice thing of this strategy. Of course, if you're wrong and Sandisk drops all the way back to like 530 or 520, then you're wrong. So right now, maybe to add, you can also buy one put, again, the cheap insurance I told you about. Buy this one put again for like 500 or maybe 450. It's like cost you 380. And you kind of like create this butterfly over here. It's pretty small, and then this whole area will be like a loss. However, if Sandisk really drops all the way back to 440 or like below that, then at least your put will like absorb some of the damage, and you will like do not lose everything from this butterfly strategy. So this is how I would do it, and it looks like this. Of course, if Sandisk peaks around that 550, you get the most. If it goes beyond that, you at least double your money. However, if it drops all the way back to like this amount, then at least the put will absorb some of the damage. However, this is how the broken butterfly looks. And of course, the other one I showed you, it will be just the single put that looks like let's say strike 450. This one you could buy this for 380, and if it drops all the way to like 400, then at least you will make a lot of money from this. So this is how I would place Sandisk. Also keeping so like consider that this stock has done like 1,000% last month, and the probability of it doing another 1,000% is just pretty low. Just like observing the market from over time. Even Nvidia, they had their moment in 2023, then it steadily went up, but it didn't go up like 1,000, 2,000, 3,000% each month. That's not really what's happened to Nvidia. And right now, this stock is even, it's not like Nvidia at all. It's just trading a commodity. It's trading memory, and it's not different from all these other memory companies that are also supplying memory to the hyperscaler. So this is how I would play Sandisk. Buy the cheap insurance, and if you have that cheap insurance, then also buy the butterfly. And if you buy the butterfly and it looks something like this, then at least you can make some money back from it. So this is how we do it. And right now, if you are interested, if there's also something that you need to consider, and that's called closing down the butterfly. So let's look at the exact butterfly that I had that was like around the 550 mark. So I put this one at 540. This one that you need to sell needs to be at 550, and this one will be 560. So you center it around the 550 strike, and it looks like this. And so this is the butterfly that I had with the $50 cost basis. So how do you close this down, right? Because you need to consider also, if you do something like a butterfly, you're actually betting on volatility to go down. You're betting that after earnings, IV will crash, volatility will go down, and everything will be revealed through like its true value. Because right now this is trading at 23. However, if the stock goes to 550, this will drop to like 10, this will drop to like 1, and this will drop to like 0, right? The value of these 3 calls. So this will be the true value after earnings, and that's kind of what you're betting on. However, before that, if you do something like this, the price of this butterfly can swing dramatically because of volatility. You're actually buying a lot of volatility over here. So right now you're betting on volatility go down. And if that happens, then everything will be revealed and its true prices will be revealed. And that's something that you need to consider, that before the strategy will like reveal its true value, before the earnings, like after earnings, everything will be revealed, and then you will see the kind of the word. But like before that, it will swing dramatically. Now, how do you close this down? It's just like inversing everything that we have. So you sell this one, you buy this one, like you buy 2 of these, and you sell this one. You get the inverse butterfly that looks like this. So to do this, then let's say if Sandisk really ends up at, between 540, 550, this one drops to like $1, this one drops to like $11, this one drops to 0. And considering time value, there's only a little bit of time value, so I expect this one to be really at like the intrinsic value. So like 540, this one will be 0, this one will be 10, this one will be 0, this one will be 0. So this one kind of how you do it. And then you can say, I will sell this whole package for like 9, you know, just like if you really want to hit your limit order, then just sell this whole package for 9 the next day, because this one will be worth $9 and these two will be worth 0. So you don't have to, you know, buy back this one cup. So this is kind of how you close out the butterfly. So, and I think that will be it. So a bit of a recap, you know, Sandisk did, you know, a lot of, had a big rally again, you know, last couple of months. And, you know, you might want to buy some cheap insurance in the form of like a cheap put option before earnings. However, you also want to do something that's a bit more neutral bullish by doing like a broken butterfly strategy that kind of looks like this, you know. And this is kind of how I would play Sandisk. Thank you.